request everyone to please keep your phone on silent mode. Before we start the meeting, please rise for the institute motto and followed by national anthem. Vindhya Himachal Yamuna Ganga Uchchal Jaladhi Taranga Tab Shubh Name Jage Tab Shubh Ashish Mange Gaye Tab Jaya Gata जन गण मंगल दायक जय हे भारत भाग्य विधाता जय हे जय हे जय हे जय 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 हे भारत माता की जय। Welcome again, friend. Friend, as a professional, staying updated with the latest provision and compliance changes in income tax is not only necessary but critical. With the assessment year 25-26 approaching, today's session will focus on applicable provisions of income tax and TDS for assessment year 25-26 and key changes in ITR form. Friends, we are privileged to have with us a highly respected and knowledgeable speaker, CA Avina ji, a seasoned expert in direct taxation and a sought after faculty in various professional forums. Sir needs no formal introduction, but just to highlight his deep insight into practical taxation and compliance made this session both informative and highly relevant. I request CA Jay Saji to give a formal introduction of our speaker.
Good morning, everybody. It's my privilege to introduce today's learned speaker, Sri Avinash ji. Avinash ji doesn't need much of an introduction, as convener has already said. He is a fellow member of our institute. He's practicing on direct tax and auditing from last more than 3 decades. He's a regular speaker at various forum, including our study circle. And by now he has delivered more than 600 lectures. So that is really worth noting. He's a regular faculty with the prestigious institute like IIM. That shows his caliber. And he has co-authored various books. He has served on various committee of our institute, including institute at Delhi. With this brief introduction, I present before you CA Avina ji to update you on the subject. Before Avinash ji gives us the deliberation, I request our past convener, Sri Mahesh ji Bagaria, to do the honor of giving a memento on behalf of all of us. Sri. Yes.
Good morning, everybody. First of all, I would thank. I'm audible now? Conveners Jayesh Bhai, Deputy Conveners Lalit ji, all the members on dais and seniors in the profession. Today is the 15th meeting on this subject. I am speaking on 15th time on this subject in this month. Material, I think everybody would have got it. It is already available on the public domain from all the websites and everything. But this material today is slightly changed with giving you certain full details about the changes in the ITR, what utilities have been released. I have been given the time to speak up to 10:30. I'll try my level best to give the best possible out of this. Topic per se today was additionally to cover ITR and TDS. TDS, there are not much changes because except 2 or 3 changes are major changes. I'll highlight it in the last. All other are rate changes that you everybody know. And now I think coming days, everything is available now in the social media. So meetings may require, may not require, study circle meetings will require or not. Things will change, come. What we today discuss is only for the purpose of discussion. Neither the study circle nor me should be held responsible because things keep on changing. Materials also keep on changing. Views also keep on changing. So what we discuss is today for the purpose of discussion only. And if you think that anything should be added in this material, my email ID is given in the last slide. You can just mail me. I would be obliged to add any contribution which is received from your side, because I have received so many mails that this thing is required to be added, and accordingly this presentations is being updated. So it is a compilation of all the people and all the contributors. I'm extremely obliged to them. And based on this, the material is being added. So every time when I speak, their contribution is also being added to that. I always starts with certain interesting statistics of the income tax return, because this is my hobby to add. Because last year, if you see the income tax department releases figures, now we have 14 crores PAN registered on the income tax website. And out of this, total number of PAN individual who have registered individual users are 12 crore 91 lakhs. And out of this, Aadhaar registered linked is 11 crore 86. So still, after so many opportunities being given, so many penalties levied, then also still there is a difference of 1 crore 5 lakhs. The difference is not getting filled up. And 9 crore 19 lakhs returns were filed last year, out of which e-verified returns are 8 crore 64 lakhs. So still there is a gap of 50 lakhs returns which are still not e-verified. After filing the returns, due to some or other reason may not be e-verified, because people would have uploaded the returns and they didn't want to e-verify it, or some or other returns. So one thing I would like to add here after verifying this, that do you have an option of discarding the returns on there? So if you don't want to file e-verify the returns, there's an option of you discarding the returns. So if you use that option to discard the returns, so that these figures get removed from this, your ITR gets removed from the system. So you can use that. That is why I added this slide. Departments issued 4 crores 35 lakhs 4 lakhs 35,000 refund amount of refund last year. And most of the people have now started using the utilities provided by the private software providers. But last year, the department has released the figures that almost still 40% returns have been filed by using the department's utility, and total returns processed out of 19 crores returns filed, 8.40 crores of the returns have been processed by the department till March. This is all the March 25 figures. These are the figures. Then coming to other about the income tax ITR notifications, that these are the series of the notifications about the ITR returns which were notified and which were the utilities which have been received. ITR 1 utility paper returns date wise, this 29th April was the utility was paper return was released. ITR 3 was released on 30th April. 5 was released on 1st of May. Second ITR 2 was released on 3rd May. 6 was released on 6th of May. ITRU, that is, was released on 19th of May. And finally, which was awaiting, that people were awaiting why these utilities are not released, what is the extension is going to come or not. Finally, the notification came on 20th of May that the date has been extended. Now people are worried whether the tax audit date would be really extended or not. Slowly and gradually that will also come, don't worry. So once these are released or not, and why this, now people are asking why this extension has come. That is question now in the mind. So that will come next when we come to the subsequent slide. That is because of that is my view. That is not the department's view, but why this has been extended. ITR 1 and ITR 4 are enabled for filing. Other are in the process, slowly and gradually come. ITR 2 is now in the process. Within a day or two, it will come for filing. It will be enabled for filing. But I would recommend that please don't file the returns till 26 AS and your ITR, this AIS is finalized, very cross-verified, because this year the AI tools are being enabled. When we come to the subsequent slides, we'll discuss them in detail. Coming to the summary of the figures, that is about the ITR filings. highest returns filed last year by ITR2, that is 34.69% growth was there in ITR2 filings. If you compare the figures, highest filers ITR2, ITR3 stands second, that is 16.66%. These are the filing growth. ITR-A, that is what we call, that is, if you fail to file the returns, the last option which remains, the growth is 13.16%. When you come to this ITR-U or ITR-A, what is called, the confusion is that whether we should call this as ITR-A or ITR-U. Department calls it as ITR-A and we call it as ITR-U. Both returns are same only. There should not be any confusion. So there is a growth of 13.16% in that year-to-year basis. The most filers in individuals is 1.20, basically 1.23 crores filers. Basically, this is not. And other interesting filers is see the return-wise, income-wise return filers. That is individual returns filers. If you see up to 5 lakhs returns filers, 3.81 crores, up to 10 lakhs, 3.36 crores filers and filers. So if you compare both, add both these figures, it comes to 7 crores 40 lakhs. Now from 9 crores the returns filers, 7.40 crores returns are. If you come to this year's figures, government is not going to get any taxes out of this returns. Because here, this year limit will be 12 crore. So almost everybody will be out of the, government is not going to get a revenue out of this limit. So comparative figures. And another highlighted figure here is that lakh person having income above between 1 crore to 5 crores individuals. The filers are 2,97,000 across the country. Across the country, 2,97,000, only 2,97,000 returns across the country. These are the official figures from the income tax. This is taken from the income tax website. And between 5 crores to 10 crores, 16,797. Now this, if you compare these figures you can, this amount of returns you can find it in, I think, in from Borivali to Andheri only. And let us come to
about 10 crores, there is nobody.
Then coming to the last year figures. Last year above 1 lakh, above 1 crore, 2,25,963 returns people had disclosed these returns. This much income was this. Slowly and gradually, these are the official figures. March 24. These were the people who had disclosed their income. So when these tax limits are being increased, automatically the people's income also gets increased. So these are the practical figures. And last year, if you see the total filers were 8 crore 46 lakhs, out of which individual filers were 8 crores. These all figures are the official figures from the income tax portal. Now coming to this ITR 1 to 7 filers. These are the total ITR A filers. 22-23 filers were 217, which increased to 602 filers. That is, you have this benefit of belated filers, that is those who have not declared the income and those who want to take the benefit of the new return filers declare that additional income they want to show it. Only 602 people has taken the benefit throughout the year. And because of this, the growth was 13.16%. Only 602 people has taken the benefit last year of ITR 8 or what is ITR E. Okay, so these are the statistical figures. Now coming to the provisions of section this, when we come to discuss the ITR filings, we should not skip the provisions. That is 139.1 and 139.3. You need to file the returns. There's basically there are certain category of persons they are required to file the returns. 139.1 is within the specified time limit or due date, we have to file the returns. So within the time limit, if you don't file the returns, you can file it after the due date on or before the specified due date, but before 31st of December with a specified late fee. If you have a specified income, you need to pay the specified late fee and you can file it. Then, after filing the return of income, if department identifies there are certain mistakes in the returns, then they issue you the notice that within 15 days, they are processing defaults which have been identified while filing the returns. They give you the time. And within that specified time, you need to rectify that mistakes that returns under section 139.9. If you don't rectify that mistakes, that return is removed out of the system and it is treated as return not filed. But again, there is a procedure. You need to follow that to take it on the system. We need to have a separate discussion on that topic, but this is just for general information. Unless and until you don't pay the tax, you don't e-verify it, you don't complete the next proper system, which is design system, specified procedure. The system is, the return is not uploaded on the system. You need to verify it to take this return on the record. If a return is a loss return, if you don't have the income, but you need to take that return, carry forward that loss, you are compulsorily required to file the return. But certainly if you identify a loss, and certainly you identify that you want to disclose some additional income after the due date, that is a specified time limit which has been over, then you can file an updated return which was introduced in Finance Act 2022. We'll come to the subsequent slides, we'll discuss later, but that also is available. Certain categories of people who has been identified, they've been notified that even if they don't have any income, they are mandatorily required to file. 6 categories of people are there. That is, bank deposits criteria is there, turnover criteria is there for businessmen, professionals, spending criteria about electricity bill, rental, assets holding, basically hold the ownership of a flat, vehicle, if they are signing authority in a foreign country, even if they don't have any income. If they are claiming any tax deductions, TDS is deducted, they are required to file the returns. Then they have any status in the society, like they are in a credit card. It is considered as status to have a credit card now. Any credit card, they are also required to mandatorily file the return, even if they don't have a return income. If they are holding a membership of any club, even if they don't have any income, they are required to file the returns. And from time to time, government will declare any such category of persons, they are required to file the returns. They may be notified. Even if they don't have any income, they are required to mandatorily file. So these all categories are now specified in Part A of the return. They are required to file the returns. So these are the mandated returns you are required to file it, even though you don't have the income. So slowly and gradually, if you see that all people are covered in the filing the return of income. Now you see a person, common person may be having a credit card, he may be having a flat, he may be for traveling, electricity bill spending also is covered to file that. So that has to be seen by filing the return, whether he is eligible to file the return or not. But after this, also certain persons are exempted from filing. Only one person is exempted from filing the return. Still one exemption remains. One person is exempted from return filing. It should be a person. It says that a senior citizen individual who is of the age of 75 years or more, and he should be a resident individual. He is exempted from filing the returns, provided he should not be having business income. He should be having only pension income and interest from the accrued from the same specified bank in which he is receiving the pension, and the state bank has computed his income and deducted the TDS from that pension and income he is filing and deducted. So he is exempted.
What is it?
Then he should not file the return. Then he is exempt. Otherwise, no. This person is exempt. The tax is deducted by the bank, then he is exempt. I am having one such case. Huh? So these are the provisions relating to income. After filing the return, if suppose certain rectifications, certain mistakes have been identified, then you can rectify these mistakes. Then again, is section 139(5) comes into picture. You can rectify these mistakes. Then again, there is says that provision says that you can rectify the mistakes. Completion of assessment on or before the end of the relevant assessment year. That is now the due date is within the 9 months. That is 31st of December. Belated return also can be revised to disclose the additional income. But if additional income, it is only to disclose the additional income. You cannot reduce the disclosed income or increase the loss. This is the condition here. But the chances that when you have one catch is that when you disclose the additional income, the chances are there. The department may levy the concealment penalty. Chances are there. Chances. It is not that it will. It may. But here they say that you have to pay the taxes first. Taxes has to be paid. Without paying the taxes, you cannot file the return, and e-verification has to be completed. But if the search and seizure is there, then you cannot use this option. Then provision related to updated return. That is, suppose after this, all these things are over, and you want to again file, disclose some additional income, then you can do that also. That was amended by Finance Act 2022. That is one section 139(8)(a), effective from 1st April 2022. It can be filed up to 4 years. Now, after the amendment in this budget, there is Finance Act 2022-25. Till last year, it was 2 years. Now it has been extended to 4 years. Option is there that you can file an updated return once only for one assessment year to report an additional income, not to reduce any disclosed income or increase the loss. But there should be that you cannot claim any refund. You cannot increase your loss.
Sir, question on updated return. When I file updated return, you need to declare and pay more tax. So 25% I pay 50% tax. Then different has to be granted by the department.
Yeah, department will grant you.
They process it because.
Yes.
It is internal same for refund.
Yes, yes.
They will give.
They automatically, even at the time of filing the return only, it will generate the
So the return shows zero. The return shows zero. Doesn't show any refund amount, even though you get more tax. There's an issue, because I have encountered this situation.
It will compute the tax automatically. No, there would be some difference in the utilities there, because what we need to see that. E-verification has to be completed. Again, if the catch here is that returns cannot be filed in search and seizure cases. If there is a search and seizure, you cannot file the return. And this is that in financial year 2024-25, 602 returns were filed. Then amendment in Finance Act 2025, the time limit, that is 12 months, 24 months. Now you can file up to 48 months. So if you file after 12 months, within the 12 months, you have to pay 25% of the additional tax plus interest. If you file within 24 months from the end of the assessment year, you have to pay 50% of the additional tax plus interest. If you file within 36 months, after the end of the 36 months, then you will have to pay the 60% additional tax. and 48 months from the end of the relevant assessment year, then you have to pay 70% of the additional tax plus interest. You have to see which is the win-win procedure situation on the case-to-case basis, and you have to take the decision in case of SSC. So this is the change which has happened in the assessment year 25. This from the Finance Act 25. So this is the first change. Amendment effective from 1st April 2025, retrospectively.
If we construe that just because we are paying additional tax, that cannot be 271(1)(c).
There cannot be. There cannot be.
Totally extra tax.
That is why additional taxes come. Yeah, this is the summary of the changes which has been there in the ITR forms. So ITR forms in ITR 1 form. Now chapter 6A, ITR 1 form is directors, a person who is a director in a company or a person who is holding shares in unlisted companies or is having a capital gains more than 1,25,000, or a person who is having more than one house property or a business income or foreign income or assets or income more than 1 crore cannot use this ITR 1. Now people will tell that we are using the software, our software automatically selects the ITR form, right? But everybody will be having that question in the mind. We are using the private softwares and our software automatically selects the return.
It recommends.
Yes, the software recommends the ITR. Whether you want to select that ITR or not, you can select the ITR which is of the higher version. It is always permitted. You can use the higher version of the ITR. Definitely you can use it. But when you are using the higher version of the ITR, whatever the mandatory details are there required in that ITR, you have to fill that details in that ITR. The relevant section in there that is required to be filled up, that is mandatorily required to be filled up, that is section 112A, section 80C, and section 1013A. There are changes in these sections. You are required to fill up in that. When we come to that specific, we'll discuss it in detail. Then ITR 2 is applicable to individuals, HUF. ITR 1, non-resident individuals cannot use this. They have to shift to ITR 2. Individuals, HUF, without business or profession income. There are no changes in that. Only the changes which has happened in the assessment year to 25-26. Just we are highlighting it. That is enhanced reporting for chapter 6A, deductions and salary deductions like claim section 80C and section 13A. Capital gains split you have to give it because now there are 2 capital gains changes in this year, that is post 23rd July and past and after 23rd July. Then buyback loss of shares post 1st October, that is in case of buyback of shares from unlisted company. Then assets liabilities disclosure, earlier it was 50 lakhs, now it has been increased to 1 crore. ITR 3, that is for individuals and HUF with dividends, this business and profession income cannot be used for LLP and companies. All disclosures same as per ITR 2. Only one clause has been added, that is section 44 BC. Then TDS reporting has been enhanced. These all will be covering section wise, will covering in the subsequent slides. Then additional disclosures has been added for 44 AD, 44 ADA, 44 BC, section 28, 112 and 139(1). ITR 4, that is additional fields which has been added, that is about 131 as per ITR 1, what was required that has been added here, same to same. TDS section reporting, because now suppose if the dividend is up to 1,25,000, 1,25,000 is dividend, if is there, income is there, then that earlier you had only salary, business income deductions, so dividend deductions, anything you are claiming it over here. So that second field of TDS deduction has been added. No carry forward of business loss, capital loss allowed here. Section 112 long-term capital gains less than or equal to 1,25,000 is reporting. Then you can use this ITR if you are eligible to file ITR 4. ITR 5, ITR 6, same changes as per ITR 3. And ITR 7, some changes, same changes as per ITR 3 if you are eligible to file. And Schedule BP has been updated to add Rule to 10 IA. That is up to if you are, that trust is eligible, is doing the business of raw diamonds. The relevant, I marked the relevant sections where the changes are there. You can just refer to these slides. Then coming to the slabs, that is whatever the changes are there. This need not be discussed because everybody is aware what are the changes are there. The client may come to you, how much benefit has been happened, what are the changes in the slabs. That is up to 12 lakhs, 5,000 benefit is there, and up to about 5 lakh, about 12 lakhs, 10,000 saving is there. But one big change is there, that maximum surcharge has been capped to 25% if the SSC is following new tax regime. Then there are many benefits or many changes which has happened in those who are opting for new tax regimes. So slowly and gradually what the department was, this the CBDT wants that people should come out of the old tax regime and they should shift to new tax regimes. The first major important changes here is that those who are opting for the new tax regime, the standard deduction on salary is been increased from 50,000 to 75,000, and for those family pension account, their standard deduction is increased from 15,000 to 25,000. Secondly, please sit here, no? You can sit here, no problem. You can sit here. Come and sit here, no, not an issue. Sit. Then second more biggest change is that those persons who are having income from residential houses, those who were declaring income from residential houses under the head profit and gains of business or profession, under income from letting out of residential houses under the head profit and gains of business and profession. Explanation 3 has been inserted, that is now says that you will have to disclose this income under the head income from house property, and only 30% deductions will be allowed. You cannot claim more than 30% deduction. This is the biggest change. Now at the time of entering this, if you are entering this under the head profit and gains of business, and suppose if your case is selected for scrutiny, then this will be a big problem. So see that you report this under the income from house and property. This is the biggest change from the Finance Act 2025. You will have to report under the head income from house property. It is only for residential house, not for commercial property. So this should be taken a note of this, to be charged under the income from house only even if the property is held as stock in trade or letting in the nature of business. So this is the another change. Second, another change, that is 31 section 37(1) explanation 3 has been amended. 23rd circular number 38 up to 2025 dated 23rd April 2025 says that those who have paid any type of amount, any amount for contravention of any law, and that amount has been debited in the profit and loss account as an expenses, you're claiming that MA expenses, amount paid to SEBI, Securities Contract Law, Depositories Act or Competition Act, that will not be allowable as an expenses. So this is another change, so you have to disallow that. So this is also one of the biggest change that is in the tax audit report also. When we discuss come to the tax audit changes, I have covered tax audit also. So this also, when you are going to sign this year's tax audit report, this is also one of the amendment. The auditor has to certify whether there is any such amount which has been paid by the debit, if there is any such amount debited in the profit and loss account. Then about biggest change about remuneration to the partners. Prior to financial year 24-25, the remuneration allowable was first 3 lakhs of the book profit, 1,50,000, 90%, 1 lakh on the first 3 lakh was 1,50,000 or 90% of the book profit, whichever is higher, and on the balance 60% of the book profit was to be computed. And from financial year 24-25 and onwards, on the first 6 lakhs, it would be 3 lakhs or 90% of the book profit, whichever is higher. And on the balance book profit, 60% of the book profit, whichever is higher. Now the catch here is the partnership deed should provide for such clause. So if your partnership deed says that the remuneration is allowable as 1,50,000 or 90% of the book profit, and you are providing other way, then it should not be. You need to amend your partnership deed, a supplementary deed, etc. Even LLP for LLP supplementary deed, and for other than LLP, amendment to the partnership deed needs to be prepared, and that deed should be prior to. It should be effective from. It should be of 1st April 24.
But the remuneration as per section 40B is mentioned.
If it is mentioned as per 40B, as per amendment from 40B from time to time, then it's fine. If it is changes as per 40B from time, then it's fine. Otherwise, you need to change it. So that has to be verified. And secondly, in tax audit also, you are required to certify the remuneration which is paid and is allowable. So you have to see that while doing the tax audit also, you have to see that the remuneration which is allowed. You have to verify the partnership deed, whether that remuneration is allowable. So cross verify with your partnership deed also, whether that remuneration is actually allowable or not. So this point should be noted that while doing the tax audit, see that the partnership deed should be verified or that this remuneration is allowable or not. Now, coming to the tax capital gains changes. There are 4 changes in the capital gains. First change is the rates, short-term capital gains. That this year we had 2 budgets. There is first on 23rd of July and second after the new government took the charge. That is short-term capital gains under 1111A. That is 15% has been increased to 20% if the STT has been paid. Long-term capital gains 10% increased to 12.5%, and unlisted securities of the closely held companies for non-residents increased from 10% to 12.5%, and all other long-term capital gains are reduced from existing 20% to 12.5%. This material will be circulated to everybody. Don't worry, don't take the photographs and all. This will be circulated to everyone. And secondly, indexation benefits has been withdrawn for transfers on or after 23rd July 2024. But one change has been made, that is provisional to section 1121A, that long-term capital gains would be lower of 12.5% without indexation or 20% of with indexation, whichever is beneficial to the SSC, resident only for land and building, or both for individual or HUF who are the resident in India. Only for the persons who are resident in India, not for the non-resident. So you have to see that prior to properties which are acquired acquired before 23rd of July, for them, whichever is beneficial, you have to compare index cost of index cost or capital gains worked out after the index cost, or 12.5%, whichever is beneficial, that will be your tax, and it will be your capital gains payable. The property acquired after 23rd of July, you will have to pay 12.5%. So this is one of the biggest change. Clear? Then certain capital gains, that is option to pay 10% under proviso 112 has been withdrawn for listed securities other than zero coupon bond. That is date of transfer of capital gains up to 22nd July will be old rates. From 23rd July, it will be new rates for zero coupon bonds. Then amount of non-taxable long-term capital gains has been increased from 1 lakh to 1,25,000. So earlier, our benefit was there, that is up to 1 lakh, no capital gains was applicable, that is increased to 1,25,000. So here one question is there, whether you want to, you can use this 1 lakh prior to 22nd July, you can use it after 1,25,000, this after 23rd of July. Whether any person who wants to use prior to 22nd July or he wants to use after 23rd, 2nd, 3rd of July, can he use that or no?
Election has to be. Sir, question. If any agreement is registered on 23rd July 2024, at 10:30 or in the morning at 7:30, what will be the face of that
Person is a resident or a non-resident? Sir, it is clear that you have to compare both index cost and so if index cost options is for the same only. For resident individual, there is resident individual and HUF, there is no change.
And he will not resident.
Then he has to pay 12, then 20 up to from 23rd July, he has to pay, if it is on 23rd of July, then he has to pay 12.5%.
Can we argue that his agreement was registered prior to the announcement of the budget?
You have to go for litigation. Any litigation, if you win, then it's beneficial. It is a litigated case. Then the time limit that is now, earlier we had 3 applicable periods. Now it has been reduced to 2 applicable periods from 23rd July. Applicable period is, that is earlier the assets listed securities under section 121(2)(a), that is remains the same for equity bonds, where its SCT has been paid. The 24 months and 36 months period has been combined to 24 months. So that has been combined from 23rd of July. So you have only 2 periods now. Second change in definition, that is 47(3) has been modified, wherein any transfer of capital asset by individual or HUF. The word any transfer of capital asset by individual or HUF, which was not there in 47(3), has been added. So now if any transfer of capital asset by individual HUF under gift or will to irrevocable trust has been added in the definition. That has been the change. This is the change. Another change is now, that is about section 50AA has been amended to include the unlisted bonds and securities, which says that now any transfer redeem or maturity on or after 23rd of July, it will be treated as deemed short-term capital gains. And cost of acquisition for transfer of unlisted equity shares under OFS in an IFO, the cost of acquisition will be the index cost of acquisition considering the CI cost inflation index of financial year 2017-18. So basically these are the changes related to capital gains. Now we have 44 AD, 44 ADA, etc. for presumptive taxation. One more thing has been added for presumptive taxation, that is for non-resident individuals, non-resident companies who are operating cruise operations. So this 44 BC has been added. Eligibility is non-resident engaged in the business of operations of ships. Calculation of profit and gains will be 20% of the aggregate amount received or deemed to be received by or paid or payable by non-resident SSC or any person on this behalf on account of carriage of passengers. So if they want to opt, they can opt for this scheme. It will be treated as their profit, and they will be given exemptions under section 1015B for the income from lease rentals of cruise ship in the hand of the foreign company received from the specified company opting for 44 BC. If both the foreign company and the non-resident cruise shipping operating company are the subsidiaries of the same holding company, and this is for the available up till for the assessment year 2030-31. So this is the change, and again same clause has been modified, amended in tax audit also there is the same amendment. Then certain changes, that is for startups, that is the time limit was getting over on 1/4/25, that has been extended to 1/4/30. Then section 80 CCD NPS withdrawals, that is any NPS withdrawals after 29th August 2024 by individuals, they'll be exempt from tax. No tax has to be paid on that. That is considered as exemption. Then one clause has been, that is 80cc D2 has been modified. That is effective from 1/4/2025. That those SSCs who are opting for new scheme, the 10% contribution to the pension scheme has been increased to 14%. So by this, any amount which is paid by the employer under this scheme, employer's pension scheme, this will not be treated as taxable. It is exempted. By way of this, a proper planning, if it is done, this will be beneficial to the person who is getting on the higher bracket of the salary. So those who are getting a salary, those who are in a higher bracket of salary, they can work out properly. A lot of money can be saved. One such article was there in the ET Wealth. I have just highlighted this, brought just for a reference. Same person getting the salary of the same amount, 2 crore 22 lakhs. By virtue of this planning, a person was able to save a salary of rupees 10,57,000. Same salary he was getting for the same year. By investing this 14% amount, he was able to save 10,57,000 sacks. So this is just for a reference purpose. Then there are certain concessions which were given. Sunset clause has been increased for a period of 5 years. That is section 80LA 2D, section 10F 4F, section 10 4H, and section 47 7AD. The time limit was getting over on 31st March 25. Now 5 years limit has been extended to 31st March 30. Another important provisions, that is for the trust. The trust were facing so much problems. Still now, certain nations, there were 2-3 days, some messages are coming on the social media that trusts are not getting registered. Now, small trust, they have getting the problems that every 5 years they have to get registered and they have to get the exemption certificates and all. So that 5 years time limit now has been increased to a period of 10 years. The definition of small trust here, it says that the total income less than or equal to 5 crores for the preceding previous year of the application, it will be treated as a small trust. For application made under clause 1 to clause 5 or 12A1, now from them the time limit will be 10 years for application. The validity period of the registration is already extended. So now if you are already registered, your time limit automatically will be 10 years. If you have made the application, earlier it was treated as a serious default, specified violation. Now the guidelines has been amended. It says that it will not be treated as a violation, but the terms has been specified that it will be treated as it is not complete. So the thing is that the person was getting the notices that specified violation. Now the word has been reduced. This is incomplete. Second is, now suppose if a trust is there, they don't want to run the trust and they want to merge with some trust with the similar objects. And both the trusts want to amalgamate or merge into a single trust. They had to pay certain tax for the transfer of assets, etc., etc. So that has been, it says that the provisions has been relaxed. It says that merger of the charitable trust and institution will also now be possible if they have the similar objects. If both the trusts are registered under 12AA, 12AB or approved trust under 1023C, go through the provision because I don't deal in trust or all. It is not my cup of tea. It says that chapter 12 EB will not apply to that. So you have to see that it should comply with the specified guidelines. And you have to fill the clause when this all ITRs 7 has this details to be filled. This form in ITR 7 has to be properly filled up. Otherwise, what problem will happen? The processing of ITR 7 is very difficult. if some mistakes happens, problem here is to get this rectified is a big issue. Please fill up this problem first class proper because to get this rectified is a big issue. Schedule 115 TD. Coming to the changes in ITR, increased exemption limit, that is 1 lakh to 1,25,000 now ITR 1 and ITR 4. Whatever we discussed now, we will go step by step in detail. As 1 lakh to 1,25,000 is issued, exempt income for reporting. Here what you have to give, the increased limit is there, but you have to give a detail that what is your total sale consideration, what is your total cash, total cost of acquisition, that figure you have to give it, that you are not exempt, that you have, this is required to be given. Breakup is means total sale consideration. This will be cross match with your AIS. See, your AI tools has been enabled. Why also I was saying that why returns has been delayed. These all figures was just considered how this has to be cross checked. So it will be cross checked with everybody. Then your long-term capital last figure, if it comes to 1 lakh up to 1,25,000, you will be eligible to file ITR 1 or ITR 4. It is crosses 1,25,001, remove default. ITR 3 notified. Capital loss shares buyback allowed if corresponding dividend income is shown as income from other sources. Under the income here it is there that if you have a capital share loss on share buyback, if you report it in the head capital gains, that loss will be not be allowed. But if you report it as income from other sources, then it will be allowed as a deduction under income and from the dividend because which is allowed as according to this amendment in the Finance Act, it is allowed. Asset and liability raised to 1 crore. Reference to 44 BC we already discussed. Enhanced deduction for ATC, we come to that, and TDS section code to be reported, we come to that also in the subsequent slide. Then ITR claims, HRA. Last year we had a big debate on this, right? People have got the notices, HRA claiming. The genuine taxpayers of the country, they had only these options, planning done through this. Now what they say that the full working of the details has to be given in the ITR. Employer has to be full working with the salary working. So what they were getting, please fill up all this detail in the ITR itself. The scrutiny is done in the ITR itself. It says that where you are working, whether you are working in metro city or non-metro city, what is the actual HR received, what is the actual HR rent paid, salary as per 17(1), basic salary, DNS allowances, we to work out, actual rent paid, 50% of the salary, eligible exempt amount, all you to fill up here. So this will be calculated here. And additionally, the rent to whom you are paying it, their person's PAN number also has to be put. So now, khatam. If a rent is to be paid more than 1 lakh, the PAN number, name of the person to whom you are paying the rent also has to be put in it. Closed. Second thing, retirement benefits. If the person is getting any retirement benefits, the detail of the retirement benefits also has to be filled up in the returns. That is, if he is got the retirement benefit from any foreign country, in the benefit from US country or any other country other than this notified, then that also has to be filled up in the ITR itself. This is the additional requirement. Now, if he is claiming the housing loan interest, he has to fill up on the which bank he has taken the loan, name of the bank, loan account number, date of sanction of the loan, total amount of the loan, total amount loan outstanding on 31st of March, and what is the interest which is claimed. Now this can be cross-verified with the bank also. Your scrutiny is done, no requirement of scrutiny.
If husband and wife both have taken a loan, in 1 year nobody is claiming it, and second year wife is claiming.
Yes, the person who is claiming that he has to put it. He has to put the detail. The person who will be claiming, he'll put it.
It's alternative.
The house should be in the both name, no? Both, person who is paying has to put it. Person who is paying person who is paying has to put it. If suppose this house is in the both persons' name, one time husband is paying, one other time is paying. It's allowed, no? Officially allowed. Then now the person, if the person is opting for the old tax regime and is claiming deduction under section 80C, then the person is paid for suppose LIC or any private, he has to put the document policy number, document or any other document identification number. Then in that case, he has to put the name of the insurance company, policy number, premium paid for the self or family. If he is paying any health insurance for ATD, Mediclaim, etc., then he also has to put the name of the insurance company, policy number, and health insurance amount. Similar way is paid for his father or any family member, senior. The same detail he has to put for that person also. Means basically it is to discourage the old shift it. Then 80 triple C, 80 CCD and 80C, that is NPS deduction. Then he has to put PRNA number for NPS and pension related deductions. That is self. When a person is about the serious disability deductions, that is when you are claiming the deduction under section 80 for the claiming the deductions for ATU, then the person who is with a serious disability, then you have to put the type of disability, then amount of deduction claim, and for that you are required to fill up a form. That form is now made online. You have to fill up that form online with the doctor's certificate. Doctor certificate has to be attached with that form. So that for a form you have filed online, that acknowledgement number also has to be put. Otherwise, you are not going to get the deduction. So that also has to be filled out.
Certificate to be get every year.
Huh?
Every year.
No, once you get it, that's is so once that form is filed, that form will be continued to be. Then loans section 80E, 80EE, 80EE and 80EB, you have to put same details, that is loan account number, date of section of loan, amount of loan, outstanding interest paid. Then EV vehicles. Those who have taken the loan for EV vehicles, loan account number, same date of sanction of loan, amount of loan, and along with that you have to put the loan vehicle registration number also. The problem here will be that the name vehicle will be in the name of the person, person interest will be claimed in the name of the company or name of the partnership firm, or there will be a problem because mismatch will be there. And these details can be cross-matched or cross-checked with the RTO office also, whether that vehicle is there or not. The vehicle may be in some other name, that problem will be there, can be there. Then name of the specified disease, that is dependent if the deduction is and the this PAN number of the person also has to be given. The person who is dependent, that person's PAN number also has to be given, because in that certificate, when the doctor issues the certificate, in that PAN number, Aadhaar number also of the has to be put up. So that is also required, mandatory by the doctor. Then for ITR, that is above 50 crores refund, it is the LEI number is mandatory, and the validity date has been added. That is valid up to which date, that is added. Then about capital gains CGS disclosure, a full disclosure has to be given in case of a company. That is about if any asset has been sold and the amount has been deposited in capital gains, then full disclosure about when this amount has been invested, what was the asset sold, what is the full this disclosure has been added. What was the original asset when it was sold, cost, expenses, details, date of deposit, account number, IFSC code of the bank, all details has to be given now. Even bank of name, IFSC code, etc., full details has to be given. FSC now, is the scrutiny required now? So all returns are now, all 10 crores returns are under scrutiny. Pre-scrutiny. Then political donations. Any amount paid to political party You have to give because donation was last year. So whatever you do it, you are informing the government, I'm doing it. Now you come up with a new version of returns. This is the reason why returns were discussed. Now, if you pay, it will come. These pre-validated returns are coming. So the details of the amount paid to political party, date, contribution in cash, contribution in other mode, total contribution, eligible amount of contribution. So that details and transaction number and the name IFSC code of the bank through which you have paid the amount. So if it's paid through UPI, paid to bank, NEFT number, all details has to be given in the ITR. Second thing now, online gaming, online transactions are increasing. Everybody's playing on official casino, Dream 11, Play 11, extra. So for them, one line item has been added, winning income from winning of online games under 115 BJ. Then companies having that is for startup, for them new requirements has been added. That is 80 IAC, that is eligible startup. They have to fill up first year when will the details have been. This was already there. Some disclosure has been added now. That is, they have to fill up who were the shareholders, where what the shareholders has been transferred. That details has been added. MSME. Now we have to have the additional details. That is full MSME clause has been added in ITR. So for all SSCs, you have to give the details. That is what is the amount payable to MSME on the last date, how much has been paid and how much amount remains unpaid. So in case of a company, you will get all this information through MSME form filed. For other than MSME, it will be difficult. They have to work out and give these details. Same part now is been added in tax audit report. So in that case, tax auditor will have to, those assessors who are covered in tax auditor will have to certify it, whether that is correct or not. So here, amount payable to micro and small enterprise beyond the time limit, disallowed to be disallowed. Another change is that till last year you had to receive, add the acknowledgement number of the tax audit. Now you have to, UDI number has been added. Now whether we have to see whether you have to upload UDI again or not. Let us start whether the tax audit after companies have said whether we have to update the UDI or not. But most probably when the UDI is added here, automatically UDI should get uploaded over here directly. And then about foreign FSI schedule FSI. There are two changes which has happened because last year we were filling up this schedule. In this, it states that when you are claiming the tax paid outside India, the relief for the tax paid outside India, you will be compulsorily required to fill up form number 67. It has been linked over here. So both these schedules have been simultaneously linked to each other. That is, it has to be filled up simultaneously. So relief, it has been linked. So schedule TR and schedule FSI should be linked. So this is another change. This is related to schedule startup. That is, you are not required to fill up this. And share application money. This line has been added. So any share application money for startup which is pending allotment. So when this amount was received and why pending for allotment, this full details about the premium, etc., that has to be given. And the person who is not a shareholder at the end of the previous year, but was at the shareholder at any time during the previous year. Full details of that shareholders for that startup company has to be given in the ITR. So this is another change. And these details has to be there as per the information which you have submitted to the DPIT. So these are the changes related to then capital loss or share buyback. It is allowed if you responded to the info from other sources. Assets and liability we already discussed. Bank account disclosure. Another problem while processing the return, it is found out that when you file the returns, see that one bank account which is valid bank account should be validated on the portal. If you are opting out of the tax regime, in case of specifically business income, you file the 10IA form first. And specifically because in tax audit, you are required to report it, and ITR 4 has mandatorily required that you report the acknowledgement. That is another change. That is the ITR 5 form, that LLP identification number, PAN and updated business commencement date, that is added over here. Filing status selection, that is now we are required to fill up the due date of filing the returns. That is, you are required to fill up the due date. That is, what is your due date of filing the return? That is 31st July, 31st October, etc. These due dates are required to be selected because 234A interest was being charged. So or late filing of returns to handle this interest, this has been added. Now let us see how this will be tackled with. Then coming to this certain checklist and precautions to be taken. Client comes that my income is this, 26 AS says your income is this, and AIS and TIS is this. Now, which is correct? Huh? Which is correct? I say nothing is correct. Why you know? There are certain things because neither AIS is correct, neither 26 AS is correct. I don't believe on the client. This is my opinion. You should not believe on anybody because 26 AS is still not reliable. AIS is not fully complete, and client I never believe it. How many people are taking engagement letter from the client and taking a management representation letter from the client? Tomorrow the client says, see basically what happens now tomorrow suppose a notice comes that this much bank accounts are there which are not shown. There are chances that some bank you are filing your returns of income and that much bank accounts are not shown. Then what will happen? That is one big question. You are filing the returns of income, the client tomorrow the notices come, the bank account was not shown to. What is it? How many people are having professional indemnity insurance? Tomorrow client comes to you and says that I had given you the information, you have not filled up this information, not given that. So that confirmation should be there with you. So that declaration, at least what should you do? You should take the signatures, you should have some documented records. Which is tomorrow somebody comes to you, that should be some validated because when these things happen, you should have proper safety with it. Yes, computation, etc. All should be signature, and the signature should be taken, and one declaration should be taken that I have given this many bank accounts are there. You have our institute has come up with the draft engagement letter. Our institute has come up with the management representation letter. Because something should be there. It is there on our institute's website. It is there. You can download this and you can take the signature and keep it on your record. This will be helpful to you. It's just my.
JS and 28 were talking about.
I'm coming to it. I'm just let me complete this. If there is I'll give you the 15 minutes time limit for that because I'm just looking at the time, how much it is there. I'll complete before 10:15. Don't worry. It is on the last verge of completing. 15 minutes I'll give you for the question answers. Don't worry.
Some cases, the SSC is the second holder in the bank account. And even then the notice is come.
You can second holder is come.
Is it necessary to disclose that account also?
No. It will be only the first holder. I'll complete before 10:15. Don't worry. I'm on the verge of completion. So if any information in 26 AIS, it comes in any information in AIS comes, if it is not belonging to that particular SSC, you just deny that information, write that information to them that this doesn't possess, that will help you at the time of any notices comes. 26 AIS and all, you have a feedback column over there. You submit your feedback, so that will help you. Do that thing. Don't just ignore and say them. If any 26 also AS also there, you write a mail to that, if that details are available of that particular, send a mail to them. Even if that is not a mail is not, you write to your assessing officer, you write to contact us at that TDS officer, contact us at tdscpc.gov that this information does not pertain to me. Take the details. You can write to your TDS assessing officer also. This entry is wrong. So that will help you out at the time of assessment.
The AIS will be finally uploaded or that is finalized. What is the stage? What is the stage when the AIS is said to be finalized or at the last stage?
When you submit the feedback, they already send the details to that
No,
further.
his question is, when should we consider that the AIS is finalized?
After every 3 months, they update the records. And even you have submitted your feedback, finally, your work is over.
He's not talking about the return.
Then the AIS is continuously getting updated.
Yes.
Now today you are considering.
You have kept, you still, by the time of filing of a return, you have the record, that is record is final, it is kept the record finished, your work is over.
You have to get the record.
You keep the record that,
And it gets updated every day, sometime limit.
every 3 months it gets updated. It is getting updated every 3 months.
As of now, the data of March is still not available.
It will get updated on 15th of June. 15th of June, it is under process because people have filed on 31st of May. By 15th of June, it will be updated. By 15th of June, it will all 26 AS and AIS will be available for you.
So you have to wait
Till 15th of June, yes, wait till 15th of June.
But in this AIS information is basically accepting, right? Bank reports about different 22%. And this is invariably we have renewal of deposit also that putting into data.
Fine, no problem.
But then that is not.
That is not treated as an income. That is not treated as an
How
income.
do you respond to the figures?
Nothing, right, that is wrong. You figures are wrong. Figures are wrong. You mentioned that the figures are incorrect. You mentioned to them.
Enter the correct figure in the first.
Yes, finish. Then, see, while filing the returns, you should first, what you should do before that, you update your master data and profile. If any change in address are there, file 49A and get these details corrected, specifically email ID and mobile number. So any correspondence which goes, because all correspondence are done to email and mobile number only. So mobile number and email ID and the addresses, this is required. Validate all your bank accounts before filing the returns. So all bank accounts which are not there or which are closed should be removed from the system. That is second thing. Report all the deductions properly, correctly. Compute all the income correctly, comparing with the same with AIS and TDS. If the AIS, TDS are not correct, give your feedback. Claim carry forward losses correctly. If the carry forward losses, brought forward losses are not there in your previous intimation, they will not be allowed. And once your returns has been filed, file the tax returns properly and pay the taxes due. Any default notices are complied with in time. Complete the verification process in time. And once you have filed the returns, the notices which come, it says only the no payments due or nothing. People sit there, my return is, I have filed, it's done. But suppose if there is any variances are there in either in losses or any claims, verified, that is also verification is required. So that verified, if any losses are there, if any short losses are allowed or any short claims are allowed, they may be there. Next year, when you are filing a return, you may consider whatever is there in your computation or depreciation disallowance is there or any other disallowance is there, which is claims are there is not allowed. It may affect in your next computation. So that is related to this filing. Aadhaar enrollment ID is now not accepted in any returns. You have to put the Aadhaar number mandatorily. That is now changed. ITR form, that is opting out of new tax regime. 115BC requires Form 10IA. This is just for a reminder. That is TDS section amendment. This already we discussed it. Now AI tools have been enabled in the ITR. It's a certain software. Now what it says that you compute your discard, you can submit your form. We will prepare your ITR returns. You don't have to fill up the details. Some softwares that I don't want to name the softwares. But now it says that you compute your details, you submit your papers, we will prepare your ITR computations. Please be specific, please be particular. Now clients are going to come because AI tools are now very much readily available. Client will come to you. My tax is this much, you are giving me this much. Now you compare with me. Now AI tools is available. Now he will come to you and discuss with you. Sir, my computation is this, your computation is now, you show me where is the difference. So this is another competitor. Till now WhatsApp, social media, college was there. Now AI tools has come. Chat GPT is available. So pre-various. So everywhere, now you have to work it out. And in now the system, such systems that you upload the details, it computes everything. Whether that is correct, not correct, that is separate thing. And people, common people, it is very difficult to make them understand that this is not correct or not. You just waste your time, waste your energy behind it. So whether to do that work or not to do that work, whether that fees is affordable or not, you have to take that decision. But there are certain intricate workings of this AI-driven system and its implications for the test are now enabled in the new ITR. Some intricate workings, of course, you cannot just ignore the AI. It is the future. And it are inbuilt in the systems. Now it is going to be improved. It will be implemented. It has already started implementing. If you see in the softwares also, in the softwares or private softwares, when AI is added, I was just going to this also, here also AI is coming in between. So this cannot ignore it, but analyzing tools, filing returns for filing records, it is there. Comparing data we submitted, you can just compare the data. Compare the data. Efficiency and accuracy, definitely when two people are working, it will give you the analytic efficiency. Detection of tax and your department has started using it, and evasion of tax, because of evasion of taxes, all these utilities are being updated, coming up with new things. Cross verifications of data, they don't have to do anything. What is happening? Your EV data is available from the RTO. You are giving the data. They are just software only just has to compare it where the difference is there. They will give you send you the notices. Nothing has to be done. So compliance enforcement will be there. Risk assessment, everything is going to come up. So tax compliance has to be, filers has to be more vigilant now, more accurate in document keeping. But definitely risks are associated, because yesterday only I was just thinking some person income tax notice was uploaded by the article clerk on the website, and his all data was uploaded on the public domain. All his computation was uploaded on the public, everything was available on public domain. It is very risky also. Some clients' data is available on a public domain, what will be there? So there are certain risks also which is associated. And data privacy is going to become the biggest concern for all of us. Basically, big concern for big four and all this, but then we may take it. But for small concern like small and medium sized concern is going to be a big problem. Tomorrow any small article comes, and for using the chat GPT, you can just upload anything on the computer, and if it is available in the public domain, your life is at risk. And over reliance on all AI also is going to be a big concern. So now it is a big challenge. So to can take off because AI can replace everything, but it cannot be, but if it is used as a properly, it can become a very helpful employee, but can be a problem if it's not programmed properly. Suppose if you tell him that program is not written properly, it can go anywhere. Department has already started using it. So this is basically related to income tax. And another change is that retention of books, which was earlier 30 days, now it has been increased to 1 month from the end of the quarter in case of where there is a search and seizure. That is another change which was forgotten, I told you. Tax audit, I think we have already done away with, included when we was there. I've covered everything related to this. There is another change on there is some clauses which has been deleted, that has been revised. This order we have MSME we have covered with everything. Buyback of shares. Buyback of shares also the amount has to be certified. This is also change in that institute is coming up with a guidance note. I think third by this month end planning is there that we should come up with the guidance note. It is under planning. Then 56 to 7A and 56 to 7B has been deleted. Section 28 and 29 has been removed. Section 40 till now 40A that is about reporting was there. That is for resident SSC what we were, if the TDS has not been deducted, we were disallowing it. So now that a non-resident payment also has been added for disallowance in 26 clause, that is another change. And lastly about that is loan deposits taken and repaid. We were giving the details in clause number 31. Now there has been added that you have to give the codes now you have to select. This is another change. That is when you, till now we have amount accepted by cash, pay, check, etc. Now you have to give the code wise details. That is another change in tax audit. So buyback of shares, we have to give the details, that is buyback is the number of amount which has been paid or not, that has to be certified by the SSC. So don't rush to file the ITR. Don't rush to file that. I should be first in that. We are now halfway in the season. We have much time is there. After filing the return, we've done it. So friend, this is the way. Any questions are there? Because we suffer, and if we suffer because we don't let go, this is what the Gita says. Every struggle will become the dance and every prayer will become a devotion if we let something go. Thank you very much. I tried my level best to give the proper justice to the subject. Thank you. Thank you everybody for the patience. I have some time to take the question and answers. I think anybody has any questions, I will please. Yeah, please.
The rate of return is extended
Hmm.
to 15th of September.
Yeah.
With the last return and the investment under section 54A and 54 can be.
Yes, yes.
The date of that is also extended.
Yes, yes, yes.
Interest rate 34A.
No, it's not there. No, not.
The earlier years,
Yeah, it's not there.
Excuse me.
Yeah.
थोड़ा हटके है।
Hmm.
Section 45(5). And society member is receiving money from developer, plus section 194 IC, they're deducting from corpus and rent. What should be the treatment? If it's not available today, simply follow the course of this.
Sir, legal issue hai. We are not discussing this legal issue on this.
No, I'm just asking you this, whether
This
this section can be taken up at one of the lessons, because it's becoming a priority now. There are 17,000 developments in Bombay. And members are not signing the PA. Society is signing. Section 45(5) says that tax will be levied only on individuals that insured, where they give their property. But society, members of ITR signing a consent. So there is a complicated question here. I'm leaving it for the board of Asari Circle, if they can organize something.
They are coming up with the second session is on that only.
Great, sir. Thank you very much. I'm sorry to.
No problem. Second session. Any other issues relating to ITR? Yeah, please.
Related to extension of date, whether self-assessment tax which senior citizen is required to pay, that will automatically get extended.
Yes.
Yeah, definitely. Yes, there is nothing.
Because normally they give extension of date, but they don't give extension for payment.
Definitely. I don't think any question.
This is the only phrase not which has come, it is circular as not.
We can ask for, we'll request the committee to clarify it. We will ask, we'll request for the clarification.
Yeah, so normally they always extend the date, but they don't extend date for.
We will request for the clarification. I'll tell them.
Yeah, in one of your mandatory requirements of filing, you mentioned that travel, somebody has traveled and he has to file the return and all. Supposing I am an NRI and my wife is in India, she is a resident. And she makes a payment for coming to going out of the country. And she is not a taxpayer. She's not even filing the return. What is the consequences?
He has to pay, he has to file that. Yes, he has to file the return.
No escape.
Income is not a criteria for them.
No, but there will be a consequence by what the land will work out everything and then prove that she has a income below the tax.
Whether she has an income is not a criteria for filing the return. She falls in the other criteria.
That is the number of accesses who will have to file the returns will go up like anything.
Yeah, that is the purpose to file the return. See the thing is that. The thing is that out of 140 crore people, only 14 crore people are registered on the website. They want to create awareness, bring more and more people to file the returns.
So I have a question. Last person was in the old regime, but last year because the new regime was, you can take the new regime mandatorily. It was not optional. New regime could anyway take it because it was a default one. So now if this year a person wants to again go to the old regime, do you need to file that form?
Yes, it is mandatory. Yes.
Mandatory. Okay.
Deposited the capital gain, that will be also, that can also be done 50% or that will be with 30.
Can you please repeat the question?
Capital gain deposit scheme amount to be deposited. What is the due date of the return? So now that date also.
Capital gains deposit, you have to take 6 months from the due date.
So the you are filing again, deposit taken account scheme, clear deduction. You are required to deposit the monthly CGI. He's asking what is the due date for that. That also automatically extended because we 15 September will be there.
Yeah, capital gains account deposit.
Yeah.
Bank account that is within the due date of the date. It says that within the due date of the when the due date is extended, automatically gets extended. See, it says that when the due date is extended, automatically it gets extended.
When the information is denied or PAI, then how will come to know whether it is updated or it is accepted by the government?
That is not work.
That is not your work. You have denied, your work is over.
Yeah.
Sir, I have query regarding section 195, that's reduction of NRI. One property is to be going to have to take NRI of PAN is inoperative. So if we deduct tax at higher rate, like 23.92, is there any other further liability on the buyer or the he can continue?
No lag.
That our thing is that we have to deduct that higher. The if PAN is operative or inoperative, that is not our problem. Thank you, sir.
One more change is there in TDS. I just forgot to see. I highlighted it. The changes with that now up to 6 years only you have to file this. Department is coming up with the assessment procedure for TDS also like income tax. This is under planning and under consideration. They are going to come up with certain scheme for TDS assessments. That is, it is under consideration. Let us see now what is coming. And this TDS processing also, whatever the old returns are there, let us see what they are coming up with because the old returns, whatever is remaining, how they are coming up and let us see what is coming up with all returns which is there. Fine, thank you very much. Thank you everybody for this patience.
Thank you, sir. Friends, please be seated. Break 11 बजे से है. अभी इसके बाद सेकंड सेशन FEMA के ऊपर है. Sir, we are truly grateful to you for delivering such an insightful and timely session on the applicable provision of income tax and TDS for the AY 25-26. Sir, your in-depth analysis and clear explanation of the recent amendments and practical implications have greatly enriched our understanding. To give a formal vote of thanks, I call upon our Deputy Convener CA Lalit Bansal ji to come forward, please.
Good morning. Thank you, Mr. Kadampa. Feeling honored and privileged to give a vote of thanks for such a learned speaker. I mean, full house can vouch that what is the topic is in demand. So thank you, Avina sir, for insightful and enriching session about applicable provision of IT and TDS for assessment year 2025-26 and changes in ITR. It was really amazing and wonderful to note the statistics provided by him for ITRs filed in financial year 25, vis-a-vis financial 24 in various income categories. So on behalf of JB Nagar CP Study Circle, I propose a hearty vote of thanks to our learned speaker and also would like to thank all the members. Thank you.